Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, July 22nd, 2024. It's 11:38 a.m. Eastern Time. I'm starting the video, and here's what we're going to do roughly in this order. We're going to look at the equity markets, the big indices, NASDAQ 100, S&P 500, Russell 2000, and then on that, I've been looping in the regional banks, kind of pairing a trade up there, if you will, or highlighting the correlation. Quick update on USO, crude oil, natural gas, gold, silver, and then the grains that I've been highlighting recently, soybeans, wheat, and corn. Okay, let's start out equity markets. So QQQ, nothing's changed on my longer term outlook. You still have my longer term swing targets, which I remain. Those remain as is. And you still have this market top range, which we came within 1.5% of the top of on QQQ and about halfway on SPY. Now, so last week was a Friday. I mentioned the market, when we were at support, QQQ had slightly undercut the trend line, but also felt a very good price support. You can see here's about 474, this reaction low. And at the same time, the S&P 500 via SPY and or the futures fell down to their comparable uptrend line. And that's the uptrend line off the April lows I've been highlighting and targeting for weeks now for a pullback to at minimum. And so that was hit. And, all along that was what I kind of call my preferred near-term swing target, meaning these are longer-term swing target trades, and a preferred kind of final target, meaning the odds. I said it way before we got there. The odds would be good. We'd get a bounce. So now look, we haven't had much of a bounce yet. That's what I'm going to talk on today. On Friday, I mentioned that we were at support and we could get that one last hurrah, rally, and I'm going to talk a little bit on that. I'll tell you real quick. So the potential is I gave you some near-term targets on the 60-minute chart of the futures and some other things, and I'll give you those here on the ETFs. However, nothing has changed. To me, it's a matter of we're going to get one last hurrah. How far can it go? And that's it. I think the market is either topped or at maximum. I'll just tell you, if we start to get some technical evidence here, we hold these support levels, start to rally, and we start to take out some of these near-term resistance levels, including but not limited to this big old gap right here. Here, let me zero in so you can see it. We have a big old gap right there. And this is the trend line on QQQ right here. This is the April trend line as I've had it drawn. Remember, we made a slight undercut, but we also hit support. And then I added this BOD trend line, this yellow trend line here. And because that one captures the very bottom of this candlestick here from early May. So you're also coming off the April lows. You get the very bottom on the skinny part, which is the wick of that. And it comes in and captures that low. Again, BOD, this was the better trend line. But again, you also had the BOD support level, price support, benefit of the doubt. Which I call it, is about 473.50, and that's this reaction low here. So that's it in a nutshell. You also have the 50-day exponential moving average coming in there. It's this yellow line. Here, I'll turn off everything and you can see it better. The 50-day is a level traders often step in to buy, just like they bought it on the pullback there. In a bull trend, you want to buy pullbacks to it. In a bear trend, once it's taken out, see what's broken right there after dancing on it for a while. And then you're below it, and that's bearish. You rallied back, rejected, rejected, rejected. 3 rejections there, followed by a reversal, and then we recovered it. So the trend's been bullish since it was recovered, and it was bearish while we're below it. So again, the bottom line is we have comparable support levels lining up. And as I like to say, support is support until unless broken. So I'm very clear and haven't wavered on that. I think it's a level that will break. And it could break today. It could break next week. I am not sure, but I can tell you it's very easy. Just react to it. There it is. And so unless we take it out, like I said, support until unless broken. So when you take it out, which is pretty much, again, as I said Friday, as I was wrapping up the video, all you have to do is pretty much make a solidly take out Friday's lows. What does that mean? Well, it means, the market makers, the powers that be, the algorithmic trading programs, they play games. They know where the levels are. They know where traders see. So sometimes they can pop it and then reverse it hard and pop the stops on the long, suck in some shorts. a solid break, you start to go down through there and you see some impulsive selling. You get, the farther away you get from it, guys, it's that simple. The greater the chance it's going to stick, especially if you print a daily close below that level. And then that's going to open the door again to my next targets. Now, even though there it is, it's that you can react to it. You can, right now, as I said on Friday, there's two options. You can go long on Friday at those support levels with a stop below, or you wait till they get taken out. And they haven't been taken out yet. So it's pretty much Friday's lows, is a very kind of overly simplistic view. Short below it, long above it, right? Does that make sense? And now, we have a little pullback, that post-opening sell-off right now. I'm going to get to that in a second. And this is, again, another buying op. If you wanted to, if you didn't, if you went light to the weekend, like I recommended, like I did personally, I went long but light, nothing too heavy on the indexes, that is. I'll cover the other stuff in a second. Or at least on the big caps, QQQ and SPY. Then you could certainly add to this pullback right now as I'm doing this video. I'll get to that in a second, the shorter term charts. And now, if you are not an active trader and your head's spinning and you're saying long here, you're gaming these little bounces, that's not for me. Then look, if you shorted the bearish engulfing candle or any part thereafter recently, you can have a stop either above that candle, or it's only 1.5%, the top of my market top range, which is the maximum. Again, I don't even want to put odds, but it is in the realm of possibilities we get there, and we get there soon, and maybe SPY gets closer to or hits the top of its comparable market top range. So that is my maximum upside target. Anything else much more than that, I'm just wrong. This is where, again, from over a month now, a month and a half, close to 2 months, this is where I believe the market would peak in this range. So far it has. If it wants to go back up in there again, it's still in that same range. It's not changed anything there. And again, those ranges were, a combination of quite a bit of technicals and even some fundamental things that were in there. Okay, so that's it. We're at support. Friday's lows are important. What else can I tell you? 60-minute chart. When I zoom down, remember SPY did hit trendline support, and there are a lot of traders that trade the SPY, and the S&P 500 is important, just as the NASDAQ 100 is. If anything, the S&P is more important. Just about all your 401ks, anybody out there with a 401k, you have an S&P 500 index fund to put your money into. I can guarantee that. You probably don't have a NASDAQ 100 index fund. So there's more money in the S&P 500 via mutual funds and probably ETFs. But this is more of a trader's vehicle, great investment vehicle. You can buy this in an IRA, QQQ, or anything like that. So the story of that, we broke down, we back tested last week. And again, we back tested today and got rejected so far. So this is kind of glass half empty. This is bearish today, just based on this alone. The fact that last week we broke down, we back tested, then got rejected on Friday. But today we back tested again, another rejection so far. So that's bearish. Next bearish development would be a break of the recent lows, an objective short entry or add-on. Just if you do, and then we go down and we hit this next support, you can see here on my 60-minute chart about 471.90. Let's just say we hit that, or we backfill this gap. You see just beyond it, there's a big old gap back here. That would be your next level. Although the bottom of the gap is minor resistance or support. Right there's the gap. This is a little bit better support. But the thing is, if we do go down through, then they punch it out to clear the stops and then reverse, especially if they take back the trend line, then that's going to be bullish. All right. So kind of the takeaway, at least for me, keep it somewhat light right now in the equity indexes. There's some other trades I have more confidence on right now than in the very, very near term than the equity markets. But like I said, I do think there's a decent chance for more upside. I give you some near-term bounce targets, which I'll again get to in this video. And then time to be back more aggressively short. Again, if you look at the 60-minute chart, those are the levels I gave you last week. The bottom of that range, it's about 487.30. We'll call it 487. It was support. It was resistance, a breakout there. Came down and then gave it up. So that would be, if we can take out the trend line, that's the first resistance level above the trend line on this 60-minute chart, and then the top of that gap right there. And there's also some price support. So that's another potential level. Oh, and the downtrend line off the highs. However, we've had a lot of pretty powerful sell signals lately, so I wouldn't bet too hard on a rally up there. It's certainly, I'm giving you the levels in advance in case we do it. Levels that is, if you're long, you may want to take some profits on or add short. And maybe that's it, because again, the most important thing right now I see on QQQ is the fact we broke down, back tested, and so far are getting rejected. That's a 60-minute chart. We dropped down to a 15-minute, same trend line you can see there. It's just kind of zoomed in a little clearer with my micro levels, smaller levels on the 15-minute chart. About 482.25. Price resistance and trend line resistance. So I believe these were levels all covered last week. So you had that pretty decent. So there's a rejection off support. There's a big old gap. Today's gap, they've almost, well, actually the gap runs all the way down to here. So no, they've only backfilled about half of it so far. And then if we go to a 5-minute chart, that's what it looks like. I gave you this wedge last week. 5-minute bearish, bullish falling wedge, breakout there, rally up to that 482.30 target. If we get another thrust up, next targets are here. That would probably be the end of the run, is my guess right there. If they pop 488.54, you get a big old gap right there. They might want to try to backfill. But as of now, like I said, so far just a simple breakdown and back test of that 60-minute downtrend line. I'll get to the S&P in a second. Let me just go to the futures for you. NQ, this is a 15-minute chart. I'll get to my 60 in a second. I just want to point out this is an uptrend line. So if you are looking to buy the post opening sell-off, which this is what this is what I mentioned this morning. We're likely going to sell off after the open today. Boom, you're right at uptrend line support. Objective long right here. You can keep stops tight. Not a bad idea, especially if you're an active trader. Where to? Right there, that downtrend line, and this level right here, price resistance. That comes in 20,000. It's a zone. It's about 20,150 on NQ right there. And depending on if we zigzag up there, it might come in with this downtrend line off the highs as well. So what does that give you? If it plays out, you're just looking for a quick, that's 1.6%. If we carry a little higher up to the trend line, it could be 2.5 or so percent bounce. If we break this trend line, then there's really not a whole lot of price support until you get to Friday's lows. So I like it here as an objective long entry on this post-opening sell-off. In fact, hold on, I'm going to add up a little here. Okay, so that's the NQ 15-minute. NQ 60-minute chart looks like this. You've got the same or comparable trend line to the QQQs here. Again, there's a little spike candle right here. If I wanted to, use that, I could come in and get closer right there and draw a trend line like that. But I think this is the most significant one. It has more reactions, including this one right here. And so that one, again, breakdown, backtest, rejection. So now we're also on the flip side. As I pointed out last week, we have here a positive divergence right there. If we get rejected, maybe we can go down and put in a bigger divergent low, a little lower down here, this next target/support. However, if we take back the trend line, which I think there's a good chance, decent enough chance to be long, there's a downtrend line right there, again, potential target. And if they pop that, then we're going to be back into heading up into that market top zone that I have, and I'm certainly open to that. I don't want to get off topic here too long about the whole Biden stepping down. I've said several times in videos going back at least 6 months, if not more, emphatically, I told you Biden would not be on the ticket. And, I'm not the only one that knew that with near certainty. But it seems like, maybe, you can see from the market's reaction today, the market being up, it was a non-event because obviously, although maybe the masses, those people that are kind of up on this stuff knew that there was no way that guy could possibly run again. So to me, it was a non-event, and he kind of pushed it to the end. So that's it. And now here's the thing. So we'll see what the markets have. Now I still expect what I've been saying too, going back at least 6 months or more. We're going to see a heck of a correction, the next leg down a bear market starting this year, and because there's going to be instability. I always say the markets, They don't care if there's a Democrat or a Republican in office. It never really has if you look back and look at the numbers. But it's what they don't like is uncertainty. And again, the Biden stepping down to me was not it was a near certainty. It was out in my head and some others that know their stuff. However, we'll see if it's going to be Kamala because right now they're saying that's what it is, but I don't want to get too detailed here. And look, I'm not big on any of the candidates out there right now. Let me just say that. But I think it's clear. I don't think there's any way in God's green earth she can beat Trump. So we'll see what happens. And therefore there may be some other shakeup. And if there is, and that's going to be the uncertainty. Right now, she was, the odds a couple weeks ago after he tanked that debate had her by a large margin as being the next one in line, with Newsom down below that, much smaller percentage. Anyway, so where I'm going is all plays in. I want to just say where this whole election is going, and the uncertainty and instability and other changes are going to mesh with the charts. Technicals and fundamentals, I've found it's almost uncanny how they often align. So you can call it a fundamental catalyst when you have a breakout or rally in the market or breakdown, but almost always, if you look at the charts were pricing in a big move up or down, and then the fundamentals just followed, and they were the catalyst sometimes, but quite often it's a technical move. So anyway, that's my 2 cents on what's going on out there. All right, so that's it. So NQ, like I said, back testing now, but a solid recovery back above the trend line would be bullish, because that means this was a big fat fake out / bear trap for the bears, and that might have some additional fuel. It could really send us up higher than above this trend line, or not. Right now it is not a failed breakdown. Right now what it is another breakdown when you zoom in real tight on the 60-minute chart, and a rejection off the downtrend line, and that is bearish right now. So there's that uptrend line I gave you, which we're just pulled back to. Again, in my opinion, objective long entry right there. So I'm getting this out in the beginning of the video for you with a stop below. And then if you're a bearish or short already, you want to maybe wait for that to break and then wait for a break of the lows. All right, now let's give you ES, S&P 500. ES, as I mentioned on Friday, there's the same comparable trend line off the April lows, and basically a pullback, perfect tag of it. We broke from the bearish rising wedge into divergent high, went right down to it, and that one did bounce. And then I gave you this trend line this morning. If I zoom in, I said that's we need to break that trend line. And this is a great example of the time frame you're trading on. This is a 60-minute chart, so you parked on it there, tried to break it again, got intra-period above it, but rejected so far. Again, resistance, pretty clear. And if it was resistance this morning when I gave it to you before we even got there, we were back here. Now it's even better resistance, because now we have these reactions up there, that distinct reaction there, and now another set of reactions. What does that mean? Translation, the trend line is more valid. And if you pop it, and I'm going to put a price resistance level there I should have already had. You can see all these reactions here, right? So let's do that. Put a level there. I can assure you there's going to be traders watching this level. And so it's pretty much, we'll put it right at the highs. So if you zoom in, let me just do it nice and tight. Again, hopefully you have a big enough monitor to see all these levels. You've got this spike high there, and now multiple there. It's about 5,600 on ES. Very clear, guys. We pop 5,600. We are most likely going higher. Where to? I'm going to tweak this line ever so slightly. I'm going to pull it up a little tighter. 5,630. These are small little micro levels, but I've spoke many times to this. And if you trade futures, I don't have to tell you. You get a half percentage point, especially a percentage point on futures contracts, ES, NQ. You're making over $1,000 usually just on that per contract. And if you have multiple contracts, obviously it's worth it. So, and if you don't, aren't active and nimble, don't just focus on the bigger levels when I give you the daily stuff, the daily and weekly levels that we have to watch. There's another potential target if we get up there. So now on the flip side, that's all glass half full if we break out. So far we just got rejected. There's a trend line. We had a successful test on Friday. There's Friday's lows right there again. So that's going to be bearish. First off, you make a solid break in a 60-minute close. You can see how, and this is the trend line zoomed in. Look at that, how beautiful that is. All these little skinny parts, these are inter-period, the wicks on the candles, the breaks, only to see every single one close back on or above the primary uptrend line on the S&P 500 right there off the April lows. So yeah, if it goes, that's going to be a thing on a solid 60-minute red candle close below it. And then, of course, on a breakdown below those levels. So that's kind of as nitty gritty and as specific as I can be on the indexes for you. QQQ already covered a bunch of levels. That's soybeans. That's not what I wanted. I wanted SPY 60. Again, just a beautiful clean uptrend line off the. This one goes way back, as I said, beyond the April lows, all the way back to how far back did we go? But let me just come back here. Here's the April lows right there on that trend line. Super well defined, very important trend line. If I thought it was important before and I was targeting it, the fact that we hit it after the biggest drop in months and then reversed perfectly off it additionally validates it, all right? Which means it's even more significant now, which means if and when we break it, it's going to be a pretty powerful sell signal. You also have good support. First support levels right there. It's about 543 on SPY. You can see all my levels here on SPY. And ultimately, so maybe a breakdown here. Oops, let me try to draw it for you this way. I mean, that's why I do these videos all the time. We break down depending on what NQ and all the market leaders are doing. Maybe we'll get a back test on SPY. Probably not, because that will mean the NQs have rejected and taken out the recent lows. But just want to point out all these support levels where buyers are likely to step in. But the way this works is if we start going much lower, much below Friday's lows, you're probably going to see more and more capitulation from the longs, more and more profit taking. But as of now, like I said, this is a successful pull. This is the biggest drop that we've had in months. Especially in a lot of the big beloved market leading tech stocks, with including but not limited to NVIDIA hitting that key support level. Let me just go over the fangs real quick. So on Friday, let me go back to this board. I covered Apple. It's nothing much here on the daily, but Microsoft at good support. Primary uptrend line. And this is the bigger uptrend line. That's a trend line off the January 23 lows. 431.60, very good price support. I covered all these. So this is why, despite the first incumbent president that's opted to not run for re-election since Nixon, right? Is that what we have here? The market's up today because more important than any news, whether it was news to you or not, is the technicals. And these are Microsoft's biggest drop in many months, down to support on Friday. We had NVIDIA continues to test that key support right there, my first target zone, multiple reactions. It's a level I think will go, but unless it goes, as I like to say, support is support until unless broken. So that was Friday's news. That was all covered in Friday's video. All these market leaders, majority of them, Alphabet falling to good support, 50-day moving averages. So this is a reflexive bounce where the buyers were very likely and did step in. Now, how far it goes, that's the million-dollar question. I'm going to keep giving you these updates. I'll do the best I can today. I'm in the middle of buying a car for my son. You guys know what that process is, dealing with the dealership, trading one in. So I'll keep my eye on the ball here because the volatility has spiked, and this is when we make money as traders. But I just want to let you know this might be the only video I do today. I'll give you an end of day wrap no matter what, even if it's static charts. But okay, guys, I don't want to beat a dead horse. It's the same thing. On Friday we hit key support levels, 50-day moving averages, horizontal price supports, trend lines. So when Friday's lows go on the majority of everything I just covered, the S&P 500, the NASDAQ 100, and these big market leading stocks, especially those that have fallen to support, such as almost all of them, really, except Apple, at least not on the daily. These are all on the daily. Microsoft, NVIDIA, Alphabet, Amazon, with that 181.75 support level I had, Meta, All of them. Meta reversed actually last off support on Wednesday and still above it. And Tesla, as you guys know, also back tested the bear market downtrend line, still above that. On the daily, I had it a little different on the weekly. We closed right the way I have the weekly trend line drawn, so not a breakout. And if anything, just a failed intra-week attempt, but it doesn't matter because it was a weekly candle. All that matters, though, was it right here last week that we closed back below it. So all right, that's it. There's your outlook. Near term, kind of a little uncertain. I don't have super high convictions that we are gonna, take back the trend line in QQQ and rally any more off the uptrend line in SPY and ES that we've already have. So far, it's just a reflexive and expected bounce. But the $1 million question, how far does it go? And remember, on the weekly chart, I just toggled over to the weekly of SPY. We still haven't taken down. That's a beautiful uptrend line, a beautiful bearish rising wedge with negative divergences, everything you like to see. And so that has not broken down yet. So, and that's same story, guys. If you take out last week's lows, which is that red candle right there, solidly take it out, especially on a weekly closing basis. If you print a red candle that looks like this week, or I don't care if it's 3 weeks from now, that's going to be a powerful sell signal. So we're right on the line. And again, I've said it repeatedly, the breakdowns look imminent. This wedge is ripe to pop, and it probably is going to pop this week. We could break it today. We'll have to wait to see the weekly close to get a sell signal on this longer term weekly time frame. QQQ, you have the minor trend line I gave you right here off the April lows, which that did break last week, but SPY, as I just showed you, is above comparable trend line support on the weekly. All right, so that's that. Again, maybe one last little hurrah today so far. I mean, we're up over 1% at the highs. We'll see if there's any more meat left on the bone there. Small caps, I told you one of my favorites to be short, swing short. I told you that was, to me, looked like a buying climax, which means the top, if that's what it was with the volume and all that. So I gave you targets. We shorted the small caps last week up here and told you the targets on the 60-minute chart would be the gaps they'd come back to, and ultimately down here in this downtrend line. So there's still, whether we bounce a little more or not first, I see more downside in the small caps. And as I said, shorted the regional banks too. And that was a beautiful, one of my favorites for sectors. You had that big resistance level right into there last week, right in the middle of that. And nothing much so far. Look, we're right about where I first highlighted as a short at the bottom of the range at 56.60. In fact, we're right there now, but I still like it very much, even if we push up to the top of the range, if the market goes up a little higher. But I do see a lot more downside in the regionals in the coming weeks to months, just like the market. All right, USO, I told you for the first time in a while, covered my crude short just because we were at resistance. We had some divergence. With CL, I covered as well. It's about flat for crude. Crude doesn't, crude moves up and down more than the market. It's down 0.068%, but we still, the divergence really on the 60-minute chart of the USO isn't really there much anymore. And we are below that support zone by a little bit more than we were last on Friday. Again, like I said, it felt good for me to kind of just book up, take profits on that, and I may re-enter it. I'll let you know. And the natural gas, I love. I've got plenty of that. That one I covered that in detail on Thursday, showed you the long-term chart of natural gas. And I'm going to cover the futures for you here. This is the 6-month chart. Remember, I have an hourly too. We've been pointed out, we had support right there recently, right there. We took it out in one fell swoop, but it did prove to be, as expected, a bear trap because we took back both that level, the horizontal price support level, and the downtrend line, and we're coming off that big divergent low. Remember, I covered the long-term chart on natural gas too. The $2 level highlighted as big support. And go down to a 60-minute chart, and you can see that's what it looks like coming off that divergent low breakout there, coming up to the 226-ish resistance level, which is, probably get maybe a reaction there. But remember, the takeaway is this was a bear trap. The breakdown below again, I didn't have it. The futures keep rolling. I had it on another chart before right here. About 214, 215 was that support, broken, but then regained. And anyway, so these are still all the targets for natural gas. It's more of a longer term play. And then soybeans triggered that breakout that I had for you. I covered it last week. CS, where is that? That was it. Last week I highlighted this breakout back test of the bullish falling wedge pattern, but nice resistance there at 1049.5. Boom, popped it, ripping. So it looks good all up to all these additional targets I gave you from before. And then with that should go, if you see SOYB is your ETF for those of you that don't trade futures, still looking good from both a daily and 60-minute perspective. Longer term targets remain up there. Corn, wheat, those guys should ultimately follow. Soybeans right now looks the best, but also actually corn I like too. Corn doesn't look bad at all. 60-minute chart coming off that divergent low, breakout, positive divergence. Corn on the ETF it needs to pop, or ETN needs to pop 1819 to run. And then wheat also coming off a big divergent low. That said PPO, but now we have a full-blown divergent low, both the PPO and RSI now on this low here. And it could probably add a different trend line here right there that should do the trick. Pop, pop, pop. All right, so they just, the risk reward profile on these grains looks a lot better. They're down. This case can still very much be made. I haven't made it in a while, but I've made it quite a bit over the last few years, that these guys are the commodity as a whole are in a new bull market after ending a bear market that started back in 2008 and ended with the COVID lows. By every metric, I've covered this many times in the past, but if you're new to the site, a downtrend is defined as a security making lower lows, right, and lower highs. I was trying to draw with the arrows, and that was a downtrend. It ended. So when you start taking out previous reaction highs, which you've done, that shows you're in a new uptrend. So that was the first leg up in the uptrend, and we've had a corrective wave. I've already covered this with Fibonacci retracements and everything. And so by most metrics, it looks like this was the first major corrective wave in a new bull market. And so either way, we're still in an inflationary environment. The rate of inflation has decreased, but prices haven't come down. They've ratcheted up. And so anyways, that's where that is. So that's corn and, soybeans, like I said, right now, taking out that level looks pretty good. And if nothing else, it's a way to diversify. It's, you have corn, wheat, soybeans, natural gas, treasury bonds, stocks, different sectors. One day some things will be up, some will be down. It's the same premise as to investing, works just as well in trading, active trading or swing trading. All right, so that's your update there. And gold, silver. Gold gold is at that 220.10 support. This is a daily chart. Right there you have this uptrend line, which has now been taken out. That's not so good, but it's down today. I still think there's probably a chance the dip buyers are going to step in, especially if the stock market rallies. You've noticed that gold's been trading. I think everybody was the same folks that were piling in gold at the top, chasing the gold rally, the breakout, were the same folks piling in Nvidia and everything else. So those people, and I've looked margin debts up to very high nosebleed levels again recently, off the peak where it was when the market peaked back in 2022, late 2021, but still up considerably. So you have the same folks that are probably have gotten margin calls recently and had to sell their Nvidia or silver and gold, and that brought it down. But either way, silver right here is coming up on support right there. So you can't make a crazy case to buy. In fact, it just broke that trend line. But and I also told you that based off the big divergent highs, it could go down lower. I just want to kind of give you an update that we're at support, and I'll probably get a little reflexive bounce here. Can't make a super strong case on that, but silver, I can make a decent case, as I did last week. We have this support level right here. It's about 28.93. Previous lows, we came out that, that was a divergent low, gave us this rally, ended with that divergent high, and then we're back there, right there. So it's not, like I said, it's support. It's not super great support, but it's decent support. Better fish to fry. I just want to do an update because I always get questions on the metal. So what I like the best, what stands out to me, are the grains. Soybeans, corn, and wheat, with an overweight on soybeans, is my favorite at the moment. And then natural gas still looks really good. And then the stock market, like I said, be nimble. This can go either way. I can't rule out a more substantial rally than just to those near-term targets I gave you, including this morning. ES, the levels. Where was it? 3-month chart, hourly. Oh, gotta pull it out here. Up here, that's a pretty good resistance right there. So if we can pop this trend line in today's high that I just gave you, that's your next level there. And that should take us all the way up there. And so that's it, guys. And, like I said, support is support until less broken. For those of you, to update, if we're going to continue to see upside in the market, the VIX is going to continue to go down, right? So the VIX gave you some, this was the spot VIX coming off that divergent low. I've shared as a trade idea back here. It's had a nice run. The VIX itself, spot VIX, is up 44%, almost hit that 1750 target. Unfortunately, you can't trade it directly. You can either buy options on futures. You can trade VIX futures or the options on those futures. This is a 60-minute chart of the VIX VXY, that one of the ETNs that track it, and I gave you some targets there. T1 we're still a little shy of, but again, to expect a rally or be bullish the stock markets, to be bearish the VIX. So we've got a nice pop. The VIX was laid out back here even before it moved out of this downtrend line, out of the wedge, but it was up about 14%. But remember, 15% from where I highlighted it. But it's not going to track the spot VIX directly. These are near-term VIX futures, short-term VIX futures. And that's why you're not seeing a concurrent, 50% rally. Okay, let me wrap it up here. And like I said, I'll do my best if I see anything else today or later in the day. If I have to, if I am out before or right after the close today, I don't know if I'm going to go sign paperwork on the car. Last time I was at the dealership, I was there running, after, work, and I was there till 11:30 at night. Sometimes they go that way. So I'll get you an update as soon as I can, if not after the close today. This has been Randy Finney with Right Side of the Chart. Have a great day.